Hey everyone, welcome back to Corporate Decoder, the place where we decode the latest corporate secrets, and today we've got some really interesting news from GRAIL, Incorporated, that involves a big international partnership and some surprisingly upbeat financial hints. And before we dive deeper, if you're new here, hit that subscribe button and the notification bell so you don't miss out on our deep dives. Also, make sure to join our Discord community linked in the description below. We chat about these filings and more there. So, what is the big buzz about GRAIL Incorporated? Well, they just put out a report on the 16th of October 2025, and it is packed with news. The most significant piece is a major deal they've struck with a couple of big South Korean companies, Samsung C and T Corporation and Samsung Electronics. Singapore PTE Limited, with Samsung Electronics Company Limited also involved. They're recalling it a private placement, which basically means GRAIL Incorporated is selling a bunch of its stock, its ownership shares, to these Samsung entities. This stock purchase agreement, as they call it, an official document, is for selling over 1.5 million shares of GRAIL Incorporated. As common stock, they're getting a pretty sweet deal for it too, almost $70 per share. This private placement is expected to bring in some serious cash for GRAIL Incorporated, money they plan to use for their everyday business operations, especially to help get their unique cancer detection test, the Gallery test, out there more widely and get it covered by insurance. Now, deals like this, especially when a big international player like Samsung is involved, don't just happen overnight. There are a bunch of hurdles to jump over. One of the big ones is getting approval from governments. Specifically, they mention needing clearances from things like the Committee on Foreign Investment in the United States, or CIF, IU, as it is known, which makes sure foreign investments don't harm national security here in the States. Another major condition is that by early next year, January of 2026, GRAIL Incorporated needs to finalize some very important business cooperation agreements with Samsung C and T and Samsung Electronics. One of these is a business collaboration agreement where Samsung C&T would basically get the exclusive rights to sell GRAIL Incorporated Gallery test in Korea. Samsung C&T will be funding this commercialization effort and might even get first dibs on selling rights in places like Japan and Singapore. Plus, they need to iron out a strategic and operational collaboration agreement with Samsung Electronics. Think of these as detailed plans for how they ally work together, not just on selling the test, but also on broader strategies. The money from this deal isn't going into some obscure corner of the company. GRAIL Incorporated is pretty clear that this cash injection is all about fueling their growth. They want to ramp up the commercialization of their Gallery test, which means getting it into more hospitals and clinics, and crucially, making sure it is something patients and doctors can get covered by their insurance. This isn't just about selling a product, it is about building a sustainable business around a groundbreaking medical technology. Now, let's touch on the legal side of this deal, but keep it simple. This whole stock sale to Samsung is being done under a special exemption. It is not a public sale where anyone can buy stock. Instead, it is a private deal with a select group, which allows GRAIL Incorporated to avoid some of the very lengthy and public registration processes. This is pretty common for large private placements, aiming for speed and efficiency. Beyond the big Samsung deal, GRAIL Incorporated also gave us a peek at their latest financial performance. These are preliminary numbers for the quarter ending the 30th of September, 2025, so they not finalized yet. But what they're retelling us is that their US screening revenue is looking healthy, somewhere between $32.1 and $33.1 million. Total revenue is also up, in the range of $35.7 to $36.7 million. Now, here is where investors often focus. They are still reporting operational losses. These losses are projected to be between $123.9 and $126.9 million for that quarter. Despite those losses, and this is important, GRAIL Incorporated still had a substantial amount of cash and readily available investments. As of the 30th of September 2025, they were sitting on about $547 million. This gives them a good cushion, especially with the new capital coming in from the Samsung deal. It means they can keep funding their operations and research, even while they're not yet profitable. They're explaining why the revenue is up. It is from more people using their screening services, more doctors and clinics ordering their tests, new partnerships they've formed, and some marketing efforts. This is a positive sign of growing adoption. However, they also mention that the average price they get for each test might be going down a little. So, while they're selling more tests, they're perhaps making a bit less per test. This is a common balancing act in high-growth industries. And another positive note from their financials, their cash burn, which is how quickly they're spending their cash reserves, has been getting better this year. This is because they've been increasing revenue, improving their profit margins on what they do sell, and importantly, they've also seen cost savings. This likely stems from the restructuring they did last year, which sadly involved some workforce reductions, but it seems to be helping them manage their expenses more effectively. Finally, alongside this report, GRAIL Incorporated also put out a press release specifically about the Samsung partnership, highlighting it as a major move to bring their gallery test to Asia. This is essentially their way of making sure everyone hears about this collaboration in a positive light. So, what is my take on all of this? On the one hand, GRAIL Incorporated is making significant strides in its mission to get its multi-cancer early detection test out to the world. The Samsung deal is a huge validation and brings in critical funding and a powerful strategic partner, especially for expanding into the Asian market. Their revenue growth is showing real traction in the US, indicating their commercial efforts are paying off. However, we can't ignore the fact that they are still operating at a loss, and a substantial one at that. While the improving cash burn is a good sign, and the significant cash balance they maintain is reassuring, this isn't a company generating profit yet. The key will be seeing if they can continue to grow revenue exponentially while also bringing those operational costs down more significantly, or if their margins can improve enough to eventually cover those costs. The conditions tied to the Samsung deal, especially the finalization of those complex collaboration agreements and regulatory approvals, are also crucial. If any of those fall through, it could have a big impact. Overall, GRAIL Incorporated seems to be on an upward trajectory, building a solid partnership and growing its customer base. The question remains how quickly they can bridge the gap from growth to profitability, especially with the ongoing expenses in research and development for such an innovative field. Alright, that is our breakdown of GRAIL Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.